Elections are over, markets explode. What's the Fed going to do? What's up, everybody? Welcome aboard to Bubba's Bottom Line. Todd Bubba Horwitz with you, and I'm taping this on Thursday, which I usually do on the weekends, but I'm on my way to San Jose. Do you know the way? In the meantime, and then I'll be on my way to Vegas for the Traders Expo, and then I'll be obviously back in the office. But in the meantime, so we had the midterms, the big, long-awaited midterms, and they looked like they were going to be almost a repeat of 2016. As the first reports were coming out, the markets were selling off heavily. And then by the time it was all over, bang, the markets were zooming higher as the Dow was up 500 points after the election. The S&P was up over 50 points. The NASDAQ was up over 200. It was just a lollapalooza, an explosion to the upside. And I think the rally, as big as it was a little bit surprising. It was on light volume, not a lot. But in the meantime, I think everything came as expected. The Republicans picked up a couple of seats in the Senate. They lost control of the House, so now we have, as what everybody likes to call, gridlock, which means that nothing will get done. And of course, the divisiveness now could create really a nothing to get done. Now, I think that if you saw President Trump's press conference and you saw Pelosi, now again, I think a lot of this is rhetoric that goes on during these elections, but I do truly believe that President Trump wants to make things work out. I don't know about the rest, but we'll see. In the meantime, the street loved it, and they put on a show. Now the rally was on relatively light volume. The rally was on a straight, we call it a grinder. It was not a tradable rally unless you were long. There was no pullbacks, there was no sell-offs. It was basically straight up, and I think you saw some interesting things happening throughout these moves and throughout the action, and we can say it's because of the election. And of course, I think that was a big relief rally. So we'll see how it plays out. But we can now focus now with the new political system. We can now focus on 2020 and the next presidential election. And hey, I'm so sick of politics, to be quite frank with you. I think that it's a joke. Okay, but I think one of the things we're missing is that we do have the Federal Reserve. Today, okay, now again, they're not expected to do anything, and nor do I expect them to do anything as well. But again, the real key to what the Fed does is not what they do, it's what they say. It's what traders interpret their views are. If they come out with a more dovish tone, which is what President Trump would like to see, then that would mean that money remains cheaper for longer, and of course, that would excite the street. If they come out with a more hawkish tone, that would mean that interest rates are rising higher. Now, either way, interest rates are going up, okay? If you've been watching it, we see through the bond market that bonds continue to tumble. And of course, even on Wednesday, when the bonds were flying higher, okay, they finally fell apart and sold off. So we are seeing interest rates rising. We are still projecting a 3.5% to 4% 10-year. By the end of the year, I would think 3.5 would be more likely. I don't think we can get to 4 now. It's getting a little bit late in the cycle. But again, these higher rates on their own are going to cause a great deal of havoc to a lot of the companies that are out there. When we know that they are all massively over leveraged with debt, as they put together these great balance sheets. But again, as their cost of debt, this cost of service that gets higher, it takes away from the profit. We also know from last Friday's jobs number that wages are going to start to rise even faster because of the demand for employment. Wages and asset classes, everything works on the same price discovery model, okay? It's what do I have to pay to get somebody to come to work for me? So again, it's no different than pricing any other asset class. Labor itself is an asset class that gets priced. And of course, when prices rise, and right now, because there's so many jobs and not enough workers, this is going to create also some more heartburn for the companies that have got used to having a low labor cost, and now they have to add on. Again, if they're going to continue to grow, they're going to have to pay more. And I think that's something that we look at and we focus on as well. So we're going to have higher debt cost. We have higher labor cost. Now, I don't buy into the BS about the dollar being too strong for some of these multinational companies, because like oil, like any other product, the dollar could certainly be hedged, but we'll give them that point too. So you've got a lot of negatives coming forward, tying to the fact to that the guidance, forward guidance, has been coming down in each and every one of these companies, okay? So you put all this together in a big package and you say, wow, this is not as exciting and exuberant. Now, again, I don't say that that's doomed. I've been reading some articles that the United States is going broke, and I think, you remember this, as long as the Federal Reserve has a printing press, okay, and as long as we have such massive debt, we're not going broke. This is if you look at the central bank planning, okay, this is what they want everything to look like, so that the few can accumulate all the cash. But in the meanwhile, okay, again, they will print money, they will devalue assets, they will do whatever it takes. I don't want you to fall for the fear mongering of the United States is going broke. In fact, it was interesting. We've got in the United States, we've got obviously, supposedly, a lot of gold in Fort Knox, right? Okay. Do you know what that gold is priced at in Fort Knox? You know what it's on the balance sheet at Fort Knox? Well, if you do, great. If you don't, I will tell you that it's at $42.20 is what the gold is valued at based on the balance sheet. Okay. So we know that obviously the assets are much higher than what we have there. But in the meanwhile, okay, we've got an economy that, again, is getting ready to possibly go into a recession. Now, again, I'm not begging and hoping for a recession to come. I think the markets are going to get quite heavy here. I think we're going to start to see some selling here. Now, we're going into, obviously, this time of year, very tricky to try to be short, okay, because what happens now, we're getting closer to that usual Santa Claus rally. Now, if I were going to script it, I would think you would see some selling coming in, after Wednesday's big run up, okay, which was monstrous, and that actually followed Tuesday's run up from lower levels. So we've had a very big expansion here. I would expect to see some natural selling here anyways. But again, you've got a lot of things out there and too much overconfidence. Consumer confidence, as they continue to rap and tap on TV, is at 18-year highs. Well, again, I ask you to look at 18 years ago and see what the markets did. That was the bubble of the NASDAQ. Consumer confidence is a backward or a lagging indicator, number one. Number two, consumer confidence only means that they have enough money to go ahead and continue to borrow money so that they can continue to buy the new cars and buy the toys and buy whatever they want, as long as they can finance it. Because if you remember, we are a by-the-month society as a general rule, okay? It's, can I pay for it by the month? And as jobs get better and as more people go to work, obviously look at the credit card companies. You can expect them to do extremely well because we start to charge it, right? Because then we just pay the finance payment. It's really interesting when you look at it from that perspective, because again, we get to a point and we always seem to forget what happened in the past. We always seem to forget that there is danger lurking, and we forget to be savers. Now, the big story, in the media this week was 401ks. There's been I think 187,000 or whatever the number was, more new millionaires on paper created, and that's great. Okay, that's a wonderful thing to happen. But one thing we have to remember: it is on paper. It is in an inflated market. It is in a market that is possibly and more than likely priced to perfection, and in my opinion, at these levels, overpriced by a bit. Now, again, I'm a big believer in the stock market. I'm a big believer that's the greatest wealth builder that we have. However, again, we get to certain points in time, and of course, you have to have some sort of a retrace or a pullback. And I think that you're seeing a lot of issues that for some reason we continue to ignore. If you look across the globe, okay, look across the ocean at what's going on in Europe, they're collapsing, okay? China's collapsing. Now, again, if they're collapsing, okay, who's going to buy our goods? All right. So what you're seeing here is we totally ignore, because the story is that the United States is a cleanest shirt in the dirty laundry, which is actually factual. We are the strongest. But again, global growth and global economics need the help of everybody. So it's always better if everybody is doing well, okay, and not collapsing, because it keeps the velocity, the flow of money going from place to place to place. And of course, when you look at it from that perspective, you could see that we could see a global meltdown, which again, I don't predict market collapses nor crashes, nor am I a perma bear. I believe what we have coming here is another nasty correction, bear market, whatever you want to call it. Again, I think that you're looking possibly, now not this year now, I think I would say that this year we close lower on the year. I think we close lower than where we are today, okay? But I don't think we get clobbered. I think you could be down 2, 3, 4, 5% from where we are right now. We might get down 10% and then have a 5% rally late. That would be what I would personally be looking for. However, I'm not going to be totally positioned like that, because I'm going to wait and let the markets dictate to me when is the right time to make that position. But just as an opinion and as what I think, that would be how I would expect these markets to work from this point on. I think the first quarter could get really nasty. You're going to get an interest rate hike in December for sure. Okay, you've got a lot of things that have been pushed and kicked down the road. A lot of cans have been kicked down the road, which could create some selling. And of course, I think that, we're going to see some more volatility and some interesting things happen. And I think you will see a pretty severe meltdown. Now, my first target, okay, I think we've got a chance to get a 25 to 35% haircut in the market. My first view is I think we get down 10. Okay, again, I think it's important that you try to look at the market in one level at a time and where can it go based on the information we have, which is the charts. Okay, that's what all we can really base on, okay, is the charts that we look at, because the charts leave a market footprint. That footprint guides you. Now, again, is it always right? Absolutely not. But it is a guide. Again, any business out there, a retail business, they use charts or bar graphs to figure out when they need to buy. Well, the same thing is our other charts when you're looking at the market. There's a solid footprint being left. And right now, with more stocks making new lows and new highs, okay, with the actual, other than these dead cat bounce from the last couple of days, the market looks like it's ready to head lower. Now, again, it doesn't mean you jump in and sell everything right now. It means that you observe and look for the footprint that gives you the clue that we might be reversing direction. But we're not going to reverse direction here. This is Bubba's Bottom Line. Todd Bubba Horwitz. We're going to step out here for a break, and we will be back with more of Bubba's Bottom Line. Todd Bubba Horwitz. We'll be right back. Hey, everybody. I want to make sure that you take a look at our high school investing program, because if you'd like to help us out, we're trying to keep this thing going, and the capital is running low, and it looks like it may have to be shut down. But if you'd like to help us try to keep it going, go to Patreon, patreon.com. That's /Bubba Trading. That's patreon.com /Bubba Trading. We're trying to educate America's youth, and I have financed it myself for almost 9 years and gotten some help, and we'd like to keep it going. But we need a little bit more capital to go. So that's patreon.com /Bubba Trading. In the meantime, let's get back to Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horwitz with you. And, as we say, and again, I don't like to try to be negative. I don't want anybody to sell. I don't want anybody to be afraid of what's going on in the market. I want you to understand what's going on in the market. And here we have, once again, we talked about the European collapse. Okay, here we have once again, home sales in Las Vegas are down 8% year over year. Inventory is up 52%. Okay, so what does that mean? Well, it means that the selling of homes is going down. Again, a repeat similarly to what's going on in everywhere else, right? We continue to ignore these things, because it's easier to ignore and kick the can down the road than it is to go ahead and focus on and try to fix it, okay? I think that you've got a lot of issues out there to look at. Now, again, I don't want you to think that there's an impending collapse, but if you remember that markets don't announce themselves and they don't just tell you that they're going to sell off, the sell-off just shows up, okay? And I think you could just see that just show up one day, and all of a sudden all this positive energy from the election, all these vibes and all these guys going crazy, and all of a sudden, what happened? They all disappeared. So again, I want to warn you to be very careful here. I think that I'm still a big fan of the commodity space right now. I think today at noon Eastern, there's a USDA report, which I put no credibility or no credence to any of these reports. I think they're all a crock. Okay, I know that China revised some of their grain reports. It's really amazing how much stock we try to put in these reports when basically most of that information is already priced into the market long before we get into where the prices actually have to fall. Again, there's very little surprises in today's reports. With all of the information flow out there, okay, it's fairly easy for one of these big firms, which most of them have their own departments that actually build these numbers ahead of time. So they've got the model and know. So in the meantime, the USDA report, I think, is bunk. I hope there's a surprise, because I think if there's a surprise, it'll be a bullish surprise. I think if you've watched the grains recently, they've had some great action on very light volume, but they have held extremely well here. I think you take a look at corn at 370, wheat at 505, and soybeans at 880 or so. To me, those are all buys. To me, you're looking at unbelievable opportunities here. And I know a lot of you guys are stuck, obviously, with the harvest and got stuff in bins. And I understand that. If it's me, I'm holding, I'm storing. But of course, you don't want to store if you've got to pay for it. There's a difference. If you need to pay for it, you probably want to figure out how to get long the market and get rid of the crop and get the cash. So in the meantime, also what looks really good is the meats look good, okay? They've been coming down a little bit recently. Hogs, we talked about 60, and they pulled back down to 54 here, okay? We're going to roll out the February hogs, but again, they look like a buy. Cattle looks like coming down to some support. They look like a buy. So again, I think that if my theory and thesis of equities are going to sell off, I think we see that money and new money flow into the agricultural space. So again, I'm looking to be a buyer of ag products and commodities. I think that's the place to be right now. Like Green Acres is the place to be. Now, as we look at some of the other things, you've got gold has been churning once again. Now, if you take a look at the footprint, we talked a little earlier about the footprint. Gold was like this, and then it went, and now it's doing the same thing, but it's doing it at a higher level. So the footprint to me indicates that gold's going to break out to the upside. Now, interesting, on Wednesday, gold was up about $10 and then came down and only closed up a couple and then fell down. And today was down. When as of this taping, it's down about $5, $6, but it's holding within that range. That's the key to remember. If you look at support and resistance and just think about it as a bouncing ball, it bounces from the floor and then it goes up to the ceiling and then it can't go any higher, so it comes down. That's when markets consolidate. Eventually, it will break out one way or the other. We think it breaks out to the upside. Bonds, we continue to want to be sellers of bonds on rallies. That seems to be the right thing to do. Crude oil, okay? Again, as we have said, and through the puking part and the part when we had to really get clobbered on our own crude oil position, okay, we were able to get back in, but again, it is coming down. I think that you'll see crude make a move. Probably from here, it's down in the 61s area. You'll probably have a little bit of a bounce to 64, and then I would think that we would then test our next level on the downside, which is 58. And I think that is something that we need to watch. Again, I'm still a seller. I still think we're going into the 40s next year. Okay, but I think we have a very good chance to see 58 before this year is over. So we're looking for 64 right now to be a potential seller as we look for it to continue to work its way lower. The cryptocurrencies have been really, really solid, really strong, and holding up very well. Again, I don't want anybody to jump in and throw all their money in the cryptocurrencies. I think, but all of the dissent about cryptocurrencies is only because they're truly in a free market and the rest of the asset classes are not. Okay, so I think that's something that's why you hear Janet Yellen coming up. But in the meantime, JP Morgan, Goldman Sachs, all these big banks are getting involved in this blockchain and cryptocurrencies underneath the surface as they continue to bash them on the surface. So to me, That's a great sign. Again, I'm in. I'm losing money. So I don't want anybody, I'm not trying to pump and dump. I'm in. I own EOS, IOTA, BitShares, a little Bitcoin, a little Ethereum, a little Litecoin, and IOTA, XLM, I think that is Stellar. Okay. In the meantime, I'm losing a little bit of money. And I'm not taking. I didn't take an enormous amount of risk here, so I don't want you to be, like I said, this is more of a vacation type of trade. Okay. If it works, I get a better vacation. If it doesn't work, I have to stay home. That's all. It's not that big of a deal. Again, I'm not going to worry about it. In the meantime, look for markets to, I think, start to sell off here. Look for good levels. Again, there's too many issues out there, okay, that don't make sense. And when you see these rallies, my key to you, or my point to you, is I think you should watch the VIX. Okay, the VIX is a very great indicator, especially when it gets up here at higher levels and gets a little bit more volatile itself, as you can watch a trade. I think you look for the VIX, and the key is a rising VIX in a rising market would indicate you'd want to be a seller. A falling VIX in a falling market would mean you'd want to be a buyer. Okay, those are just little tricks to watch, and we'll cover it in more detail on another day. In the meantime, I don't know if anybody caught President Trump's press conference on Wednesday, and he took almost every question. There's a lot of brutal questions, and again, I have no problem with that. I am a little concerned that I don't like Jim Acosta. Okay, I don't like him. I don't like a lot of those reporters. I think that they treat Sarah Huckabee Sanders with a lot of disdain, and I think that's not the right way to treat people, no matter what your opinion is. However, okay, I think I heard, and I can't confirm this yet, but I heard that he got his press credentials pulled, and I don't think that's the right thing. Okay, again, I'm a big fan of the administration, but again, I don't know that we start pulling press credentials on who can come in. I think that's an issue, and of course, we go back to the free speech. Now again, I happened to watch the press conference. He was very rude. Okay, but again, I think that we have to be careful at some of the things that we do here, because yes, I don't like CNN. I do think they have a lot of fake news. I think the news itself is basically left, which makes it even harder. But again, as they say, I think that part of being an American is you have the right to speak your mind as long as you are not threatening or violent or breaking the law. So we'll see how that looks out. In the meantime, this is Bubba's Bottom Line. Todd Bubba Horowitz. We're going to step out of break and come back with my commentary after the break with more Bubba's Bottom Line. Welcome back to Bubba's Bottom Line. Todd Bubba Horowitz with you. And of course, every week I give a little commentary. And today is not so much a commentary, but really a salute to our military, our first responders, and everybody who really tries to make this country safe. Obviously it is Veterans Day on Sunday, being celebrated on Monday. And, I have a great deal of respect and admiration for all who served in the military, the families of those people who served. It's not just you serving, it's your whole family, because it disrupts everything. And I think finally we're starting to see some improvement for some of the things for veterans. But I can't thank you enough for the life that you give me, for allowing me to do what it is I do right here. Okay, allows me to have free speech, allows me to be a part and say as I will, knowing that you are out there to protect me. And that extends to many other of the, police, fire. I know this is Veterans Day, but police and fire and everybody else that actually make this country safe. And right now, with all of the divisiveness and a lot of the things that are going on with the shooting in California, another tragedy, another waste, the shooting at the temple. They caught somebody where I live in Highland Park, Illinois, who was going to attack another temple. All of the violence and all the crime throughout the world, and our veterans and first responders, you guys are the ones that made this all possible, that we could actually have safe communities and a safe life. And on Veterans Day and on every day. I always salute you and I always thank you. And I think that I can never personally thank you enough. Now, my dad was a veteran and my father-in-law was a veteran. So I understand the world, and I cannot thank the veterans and your families enough. Happy Veterans Day. It's a couple days early, but happy Veterans Day. I thank you. I salute you. This is Bubba's Bottom Line, Todd Bubba Horwitz. Have a great weekend, everybody, and we'll see you back on Monday with Bubba's Daily Update. To all my veterans, thank you.